Okay. Yeah, good evening, students. Hope you all are doing great. You would be in a weekend mode, I know. Maybe weekend mode mein hu. But since we are pursuing CA course, we need to study. So before we start with today's session on investment decision, let me just take 2 minutes to introduce myself. My name is Dweep Shah. I am a qualified chartered accountant. With the grace of God, with all your blessings, I secured All India rank 44 in my CA examinations. And adding to it, I secured a score of 91 in financial management. I have a rich experience of 8+ years in varied fields of taxation, financial management, accounts, etc. So, yes, that was a short introduction about me, and hope we will learn new topics together in this today's session. So let me start and share my screen. Okay, so you all can see my screen, right? Screen is visible, right? Okay, okay. So today's session, we will learn about investment decision. Which decision? Investment decision. So in financial management, basically all the financial managers, or I can say CFO, they have to take 3 decisions in their entire career as far as financial management is concerned. First is investment decision, second is financing decision, and third is dividend decisions. So entire financial management, entire topic of FM, entire subject of FM revolves around these 3 decisions: investment, financing, and dividend. So for today's session, we would be starting with investment decision. Now, the ultimate objective of this decision is to decide, is to decide, is to decide whether to accept the project or not. Whether to accept the project or not. See, as a financial manager or as a CFO, you would face one question. You would be having various projects in front of you, and you have to select or you have to make a decision whether to accept the project or not. That is investment decision. Now, please focus on the word project. Please focus on the word project. What do you mean by project? Are we talking about that school college projects? Absolutely not. We are not talking about that school college projects. We here are talking about projects that is business. We are talking about projects that is business. So your project has a very broad meaning. Has a very broad meaning. It is to be understood from broader perspective. I can say project would mean like launching a new product. If a company or if any corporate wishes to launch a new product, so that is also a project. So whether to launch a new product or not, that is investment decision. Achha, I want to start a new business. I'm into manufacturing business, but I want to expand my production. So again, that is also a project. So whether to start a new production or not, whether to expand or not, that is also an investment decision. Are you getting this? Project has a very broad meaning. Achha, I am starting a new manufacturing business. So I would need some machines. So whether to buy new machines or not, that is also investment decision. That is also a project. I have an existing machine in my business. And now due to technological advancements, that machine has become obsolete. So whether to replace with the new machine or not, that is also a project. That is also investment decision. Achha, adding to it, let's say currently I am into manufacturing business, and ideally in every manufacturing business there scrap is generated. Scrap. So scrap currently I'm selling to third party vendor on some very minimal rate. But now, through research, it has been found that this scrap can be refurbished or reprocessed and can be produced as a new marketable product and sold in the market. So to refurbish, to reprocess, I would need some facilities, I would need machines. So whether to buy that machines, whether to reproduce, refurbish scrap or not, that is also a project. And that is also an investment decision. Hope you all are understanding that investment decision is to decide whether to accept the project or not. And project, the word project has a very broad meaning. It may include many things: buying a new machine, replacing a new machine, launching a new product, starting a new business. Are you getting any queries still here? Everyone following the concept of investment decision? So investment decision, the objective of investment decision is only one thing. The ultimate objective of this investment decision is only one thing: whether to accept the project or not. Project accept kare ya reject kare. That is the ultimate objective of this investment decision. Now, let me help you to understand it better through some illustration. Let's understand with the help of some illustration. Let's say my company, Dweep Limited, wants to start a new manufacturing business. Wants to start a new manufacturing business. So can I say this starting up a new business is also a project? And now I have to decide whether to start or not. Correct? So to start a new manufacturing or to start any business or to, I would say, or to run any business, you would need paisa, money, capital. So let's say my investment, my initial investment or my outflow for starting a new business or my outflow for starting a new business is rupees 7,50,000. Now I have started a new business. I would generate some inflows. Yes or not? I would generate some inflows from that business. So let's say the inflows from this business are as follows. In year one, I have generated rupees 1 lakh of income of inflows. In year two, I have generated 1,25,000. Now my business is in the growth stage of its life cycle. I've earned 3 lakh in year three. In year four, it is 4 lakh. Let's take 4 lakh. In year five, now it is on the maturity stage. So again, it would not be growing at some higher rate, but it would grow at a very slow rate because now it is in the maturity stage of its life cycle. Year six, now on the declining stage. And year seven is my closure of this business, is my closure of this project. So my total inflows, these all are inflows, cash inflows. So my total inflows from starting this new manufacturing business. Can you all help me in calculating my total inflows? Can I say it's nothing but 1 lakh plus 125 plus 3 lakh plus 4 lakh plus 425 plus 2 plus 50. 16 lakhs? Yes or no? 16 lakhs, everyone? Yeah, correct. That's 16 lakhs. So now my question to you, my outflow, my investment is 7,50,000, or I would say let's take some higher amount. Not 7,50,000, but around 12 lakhs, 12,50,000. Okay. So my outflow, my investment in the business is 1250, and over the period of 7 years, I am earning 16 lakhs. Whether to accept the project or not? Tell me, friends, whether I should start a new manufacturing business or not. What is your opinion? DF? What is DF? Accept. Yeah, accept. Everyone is saying accept, accept. Obviously, accept. Sanya is saying not decide, cannot decide yet. Sheikh Parvez, not higher return. Ideally, just comparing the inflow and outflow. Shall we accept the project or not? Kiran is saying no. Why? I am earning 16, but my outflow is just 1250. फायदा हो रहा है कि नहीं? You just have to say that. Yes, Sai Kiran has studied this concept, I guess. But majority of you are in the favor of yes. It is very simple. You can just, what you did, you just compared. What you did, you just compared this outflow with inflow. Sir, inflow is higher than outflow. Even a class 8 student can say that you should accept this project. But friends, had this been such easy, it would not be at C inter level. Yes or no? So what you did here is you compared the outflow and inflow. That is correct comparison. You have to compare outflow and inflow only. In this chapter, in this investment decision, comparison of outflow and inflow is to be done, but not absolute numbers, relative numbers. We have to compare the outflow and inflow in relative terms. You have to compare the outflow with inflow in relative terms. You should just capture this term in your minds. Relative terms. Majority of you said, sir, we need to accept the project because outflow is much less than inflow. Yes, that is correct. You compared the outflow and inflow, but this comparison of 1250, this comparison of 1250 with 16 lakh is just absolute comparison. An investment decision is saying, no, friends, you don't have to compare in absolute terms. Investment decision says you have to compare the outflow with inflow in relative terms. You have to compare the outflow and inflow with in relative terms. Are you getting this? Everyone followed till here? Now, I know, सबके दिमाग में, in everyone's mind, there is one question that is coming. What do you mean by relative term? What do you mean by relative comparison? Or what do you mean by relative term? Yes or no? So here, relative term is nothing but comparison of cash inflow with cash outflow. That's correct. You have to compare the cash inflow with cash outflow only. But the present value of cash inflow with present value of cash outflow. Absolute terms or relative terms, there is only one difference. In absolute terms, you just compare the amount of inflow with outflow. But in relative terms, you compare the present value of cash inflow with present value of cash outflow. And investment decision says that you need to do comparison in relative terms. Everyone understood till here? PV is nothing but present value. PV is nothing but present value. In FM, we use short forms so that we can save some time. But yes, initially, you can write the entire term. It is nothing but present value. But once you are used to with this term, you can write in short form. FM is a very practical subject and it's very, 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 very flexible. Understood? So investment decision says, again, I am repeating, investment decision says you need to compare the inflow with outflow, but in present value terms. Are you getting this? Any queries still here? Anyone? Any queries still here? Can we move forward? Now, again, relative terms we understood. What do we mean by relative terms? But now next step is How to calculate present value? Tell me, friends. How shall we calculate present value? And I know you have learned this at CA foundation level. Using discounting factor. Yes, absolutely. That's correct. You have learned this at lower level of CA intermediate. Like I would say at CA foundation maths में था concept of time value of money. Yes or no? There was a concept of time value of money in quantitative aptitude at CA foundation level. So present value is the outcome of this topic, time value of money. And I know you would have seen this formula as well. FV is nothing but future value. It is nothing but present value 1 plus rate of return raised to n. Correct? Yes or no? Have you seen this formula? तो हमें कभी समझ नहीं आती थी. Now why investment decision? Now my question to you, why investment decision is saying that you need to compare present value of inflow with outflow? What's the reason for that? So can I say this inflow would be in the year 1 means ki this 1 lakh I would receive in year 1. When I say that year and this outflow is today, this 1250, this 12,50,000 of outflow will happen today, whereas inflows of this 1 lakh will happen in the next year. So when I say 1 lakh that I would receive in year 1 would have some discounted value today, would have some lesser value today. 1 lakh worth of 1 lakh in year 1 would be less today. Yes or no? Are you following? Worth of 1 lakh in year 1 would be less today. Similarly, worth of 1 lakh 25,000 in year 2 would be less today. Likewise, worth of 50,000 at the end of year 7 would be very, very, very much less today. Yes or no? And decision making, we have said today to make decision of investment. So we need to bring all the calculation at today's level, at today's point, at 0 point. Are you following? So that's why we take present value. And that's why we don't compare in absolute terms. We have said to decide whether to invest in the project or not. We have said today to make a decision. So we need to bring all the calculations today. So that's why the worth of 50,000 at the end of year 7 would be very, very much less today. The worth of 4,25,000 at the end of year 5 would be very, very much less today. So we need to bring that in today's numbers, in today's terms. Are you getting this? So that's why we are using the concept of time value of money. Now, by doing ulta fulta to this formula, can I say present value is nothing but future value 1 plus r raised to n? Yes or no? But 1 plus r raised to n, I took this on the left hand side. So can I say to calculate the present value, the formula is future value 1 plus r raised to n? Yes or no? Is everyone with me? Any queries still here? I would wait for you all to reply, to respond. I want everyone's concept to be very clear. I want everyone's concept to be very clear. Yes, that's clear. Thank you. So let's move forward. So present value is nothing but future value 1 plus r raised to n. Now, continuing with this example, my original example, let's say my required rate of return from the project. My required rate of return from the project is 15%. My R is 15% in this case. And now let's make an investment decision, and now let's decide whether to invest in the project or not. Okay. So let's decide. So again, to make an investment decision, we need to compare the present value of cash outflows with present value of cash inflows. Yes or no? So let's take my cash outflow. My cash outflow. Friends, cash outflow, my initial investment of 12,50,000 will happen today. And technically, whatever is happening today is denoted by year 0 at 0 point. We say it as we are standing at a 0 point. Today, aaj khade. And aaj in FM is 0 point, at 0 point, which is 1250. Hey, do I need to discount this? 12,50,000 of work today would be 12,50,000 only. Yes or no? आज का 12,50,000 would be 12,50,000 only today. Yes or no? So we don't need to discount this outflow. But inflows we need to discount. Can I say cash inflow? Now my cash inflow ka stream. This is future value. My cash inflow in year 1 is 1 lakh. Means can I say this is future value? My R is 15%. So I know my present value is nothing but future value divided by 1 plus R raised to n. 1 plus 0.515 raised to 1. Yes or no? So what is my answer? 1 lakh divided by 1.15. How much it came? Everyone please calculate what is the answer. 1 lakh 86,956. That's correct. So when I say year, the worth of 1 lakh at the end of year 1 is 86,956.52 today. Are you getting this? How do you interpret this 86,956? The worth of 1 lakh at the end of year 1 is 86,956.52 worth today. Are you getting this? So everyone followed how do you calculate present value? Now similarly, let's calculate for year 2. Year 2 ka cash inflow was 1,25,000. Year 2 ka cash inflow was 1,25,000. When I say my present value in that case would be 1,25,000 divided by 1.15 raised to 2. Correct? And you all know, right, how to solve this part on calculator? Achha, let me tell you one time. Take 1,25,000 on calci, divide by 1.15 equal to 2 times. 1, 2. So 94,571. The worth of 1,25,000 at the end of year 2 is worth 94,517.95 today. Is everyone following? Yeah, Pallavi, that's correct. Likewise, can you help me in finding the present value for year 3, year 4, year 5, year 6, and year 7? You all are mathematics experts. Year 3 cash inflow is 3 lakh. Year 4 cash inflow is 4 lakh. Year 5 425. Year 6 2 lakh. And year 7 50,000. Can you help me in calculating present value for each of this year's? Mathematics experts, you all are mathematicians, I know that. Okay, 3 lakh divided by 1.15 and press equal to 3 times. 1, 2, 3. So it comes to 197 254.87. So the worth of 3 lakh at the end of year 3 is just worth rupees 197 254 today. This is how you interpret the present value. Year 4 it is 228,701.29. 228,701.29. Year 5 I'm believing you all. हाँ आपने जो कैलकुलेट किया वो सही किया. I'm believing that, but I can also check on my calculator. Divided by 1.15. Yeah, 228,701. 425 divided by 1.15. 211,300. For year 6, yes, year 5, that's correct. For year 6, 2 lakh divided by 1.15. 86,465. 0.51. See, you can see the worth of 2 lakh at the end of year 6 is just 86,465 today. And 50,000 divided by 1.15. 18,796. 18. You all are champs, huh? 796.85. Now we can compare. Now tell me, what is the total of present value of cash inflows? So when I say year 1 ka present value was 86,956.52 plus 94,517.95 plus 197,254.87 plus 228,701.29 plus 211,300 plus 86,465.51 plus 187 18,796.85. And as it comes to around 923,992. 923,992. Yeah, that's correct. So around approximately 9,24,000. Now compare this. See, your investment today is 1250, but your inflows in present value terms is 924. Now tell me, what should be your answer? Whether to accept the project or not? Tell me, experts. Give your expert opinion, financial managers. What is your opinion now? No, obviously no. Inflows are very much less than your outflows. Hope you understand what do you mean by absolute comparison between inflows and why accept, Bhaskar? Yeah, not accept. Yeah, that's correct. Hope now you are understanding. Now we have learned the difference between absolute comparison and relative comparison. Absolute comparison a class 8 graduate can also do. But our task as a financial manager is to do comparison of present value or comparison in relative terms. So can I say my present value of cash inflows was 923,992 and my present value, if I subtract my present value of cash outflow from my cash inflow, when I say my net present value is in negative, my net present value means reducing the present value of cash outflow from present value of cash inflows. Net present value is 326 negative. And now we can make a decision. Now we can decide whether to accept the project or not. Are you getting this? Are you understanding how investment decision is to be done by any financial manager or CFO? Any queries still here? Inflows are estimated. Why? Because we are estimating the value for future period. Now I am starting manufacturing business. So future mein what would be my cash inflows? Are you getting this? So future is uncertain. So when there is uncertainty, you always have to take the base of estimation because we are estimating the future. It would involve many risks as well. And since future is uncertain, we have to take a base of estimation. But this would be more likely estimates, like very close estimates as far as practical world is concerned. The small query, so your difference is just for 1 rupees. So that's not a problem. That's not a problem. I will come to that. For the rate, I will come to that. How to decide what should be my R. R. Here I have taken that 15% just to explain you the concept. But in practical world, how the rate is decided, I will come to that. But as of now, any queries still here? Any clarifications you need from my side about net present value or about investment decision? So investment decision, just to remember, just to memorize, investment decision is all about deciding whether to accept the project or not. And acceptance or rejection of project will be will depend on the comparison of inflow with outflow, but not in absolute terms, in relative terms. Cash inflows are decided on estimation basis. Like let me take you let me explain you. Like you all friends sat together and decided to start a new startup, new venture. So you would estimate ना कि हमारे स्टार्टअप में एक साल में इतना इनकम होगी, इतना इनफ्लो होगा. How did you decided that? Based on some estimations, based on taking certain assumptions. So likewise, we estimate the cash inflows here. See, another example, when you sit for a planning of trip, let's say Goa trip, after your examinations. So you will prepare some budget. Budget is what? Future estimation. How did you decide that? Sir, based on certain factors, based on certain assumptions? Yes or no? कि हम फ्लाइट में जाएंगे, हम 3 स्टार होटल में रुकेंगे. So based on that you estimate the budget. So likewise we estimate the cash inflows here, like the likely income from the projects. Yes, correct, Pallavi. Correct, Pallavi. You are correct. If NPV is positive, you accept the project. If NPV is negative, you reject the project. Rate is an estimation, yaar. Why you are not getting my point? It is based upon certain factors or based on certain assumptions. Whenever you start, let's say you want to start a new business, you sat with your friends and you want to start a new venture. So क्या आप you will decide now what would be my income in year one. फिर we will grow after a certain point. फिर we will reach at a maturity stage and we will go at a declining stage. You will estimate na. In year one, my revenue would be 1 lakh. In year two, I would get 10 lakhs of revenue. How you decide that? How it is decided? It is your likely feeling from inside that I would earn, or it would be based on certain research. You would research on the project, yes or no? You would do certain research. Let's say you want to start a new project in a war zone area. तो प्रोजेक्ट चालू होते ही खत्म हो जाएगा वहां तो. So you cannot estimate there. So based upon certain factors, you have to do certain research. You have to take many factors into consideration, and then this cash inflows is decided as far as practical world is concerned. But as far as academics is concerned, you will get all these values in the question. Now this net present value, let's move forward. This net present value is one of the technique to decide whether to accept the project or not. There are many other techniques as well that we will learn in this chapter. This chapter is also called as capital budgeting. Investment decision का दूसरा नाम है capital budgeting. So under capital budgeting, you have various techniques that helps us in deciding whether to accept the project or not. And one of such technique is net present value technique. And this technique is highly used. Is highly used to make a decision. Not just from exam point of view, but also in the practical world. Again, I am repeating, capital budgeting has various techniques that helps the manager in deciding whether to accept the project or not. And one of such technique is net present value technique. We would be learning other 6 techniques as well when the time arrives. But as of now, did you understand how decision is made when any company or any corporate wants to invest in a new venture or wants to expand or wants to start a new business? Yes or no? Yes, capital budgeting is the another name for investment decision. That is correct. Capital budgeting. Investment decision is also called as capital budgeting. Capital budgeting is also called as investment decisions. That's correct. Okay, now let's move forward. Just focus. See, capital budgeting as far as financial management is concerned and as far as investment decision or capital budgeting is concerned, focus on this word, outflow and inflow. You just focus on this word. We are more concerned with outflow and inflows rather than income. We are more concerned with cash outflow and cash inflows rather than income. Are you getting this? So one of the primary or very important point of capital budgeting or investment decision is that you ignore all the non-cash expenses. There are certain pointers that we need to take care of while making investment decisions. Investment decision is concerned with these 2 words, outflows, cash outflows, and inflows or cash inflows. We are not concerned with income. We are not concerned with profit. We are concerned with cash inflows and cash outflows. कंपनी के जेब से कितना जा रहा है, जेब में कितना आ रहा है. We are concerned with that. Are you getting this? So focus on this word, inflows and outflows. And as far as cash inflows is concerned, all the non-cash expenses are to be ignored. All the non-cash expenses are to be ignored. So now let's see how to calculate these inflows, how to calculate cash inflows. ये cash inflows calculate कैसे होता है? Let's see that. Let's understand that. For that, we have a format of income statement that you need to understand in this chapter. So again, any income statement would start with sales. We subtract the variable cost. I hope you know there are 2 types of cost, variable cost and fixed cost. Do you know the difference between these 2? This you would have learned in your costing. Okay, yes, perfect. You know this. So sales में से variable cost, if we subtract, the resultant amount is called as contribution. This you would have learned in marginal costing or material costing. इसमें से we subtract fixed cost, but here other than depreciation. Only those fixed costs other than depreciation we subtract here. The resultant figure, the resultant amount, we call it as net profit before depreciation and tax, NPBDT. What it is termed as? Net profit before depreciation and tax. Are you getting this? Any queries still here? Can I move forward in this format? After that, we will subtract depreciation. सर अभी तो आपने बोला डेप्रिसिएशन नहीं लेना है, नॉन कैश एक्सपेंस है, बट आई विल एक्सप्लेन यू व्हाई आई एम टेकिंग दिस. The resultant amount is called as net profit before tax. What it is called? Net profit before tax. PBT, yes, profit before tax. After that, I will subtract tax. Can I say this is nothing but NPAT, profit after tax? Correct, Pat. Everyone, are you with me till here? We are understanding how to calculate cash inflows. If in the question cash inflows are not directly given, they would give some variables of income statement, and from that variables we need to reach at a point of cash inflows. So we are understanding the format. Okay. After this, now see, अब जादू देखो, we add depreciation and the resultant figure is called as cash flows after tax. In short, we denote it as CFAT. क्या बोलते हैं इसको? CFAT. Now my question to you. See, ऊपर I subtracted depreciation and नीचे I added depreciation. Subtract करके add ही करना था. If I wanted to add back, then why did I subtract? Then why did I subtract? Can anyone help me in answering this? Why did I subtract depreciation? To reduce tax. Yes, Rojalin Pradhan is correct for tax calculation. See, depreciation is non-cash expense. We agree, we don't need that to calculate cash flows. But depreciation will save some tax for me. Yes or no? Yes, everyone is correct. Oh, wow. Hey, you are done with this chapter? That's correct. Depreciation is an expense that helps in saving taxes. So just for tax shield purpose, I subtracted depreciation and then I added back the depreciation because it is a non-cash expenses. It is a non-cash expense and I'm not concerned with non-cash expense in my investment decision anywhere. Adik, you didn't understand? Depreciation is an expense, na? See, again, you don't know how depreciation helps in tax saving. So let me help you. Let's say 1000 is my revenue. There are certain expenses in my business. Let's say 500 and there is depreciation of 100. So can I say my net profit? My net profit would be 1000 minus 600. 400, yes or no? So when I say I would pay tax on this 400 as far as tax is concerned. Are you getting this? So let's say my tax rate is 30%. So can I say 400 पे 30%, 120 rupees I have to bear the tax? When depreciation is there, my tax comes to 120 on net profit of 400. Now, let's assume this 100 I don't have. There is no depreciation. There is no depreciation. So can I say my now net income would be 500 and I have to bear the tax on 500 at 30%, which would be 150. Are you getting this? So because had the depreciation been there, my tax would be reduced. Oh, okay. Please unmute yourself. All the participants, please unmute yourself. Oh, okay. It was answer to my question. Sorry, I thought you were asking me. No. And someone asked me to explain from contribution. Okay, I will explain from contribution. So sales minus variable cost is contribution. And after that, we subtract all the fixed cost. See, depreciation, as far as SLM, depreciation is also a fixed cost. Amount keeps on varying depending on the method of depreciation that you follow. But depreciation every year आएगा तो सही. Depreciation every year it would be there. So here fixed cost, I took all the fixed cost other than depreciation, because depreciation I'm subtracting afterwards. So that's why, just for easy explanation, I subtracted fixed cost, and the resultant figure is net profit before depreciation and tax. NPBDT, a full form is net profit before depreciation. Before depreciation and tax. उसमें से depreciation I subtracted, so I got net profit before tax. Then I reduced tax from net profit before tax, so the resultant figure is net profit after tax. And then, since I'm more concerned with cash flows rather than this profit, I'm not concerned with this profit as far as my investment decision is concerned. I'm concerned with cash flows, cash inflows. So I added back the depreciation. Hope you understood now. Yes, in order to just for purpose of tax calculation, just to calculate the correct tax amount, I would say just to calculate the correct tax amount, I subtracted depreciation above and then added back. Yeah, someone asked about interest. I will come to that point when I will explain you how to calculate R. In that point, your interest part would be cleared. I'm coming to that point just after this. So hope everyone understood the format of calculating cash inflows. We start with sales and we end with cash inflows after tax. Any queries on the format on the income statement part or on the cash flow statement part? So everyone, let's again quickly revise the format. It will start with sales, less variable cost gives me contribution, less fixed cost other than depreciation will give me net profit before depreciation and tax, less depreciation will give me profit before tax, less tax will give me profit after tax. And since we are more concerned with cash inflows rather than profit, we add back depreciation because it is a non-cash expense. So this is the format to calculate cash inflows. Cash outflow is very simple. It would be your initial investment that you add in the project or that you invest in the project. So if question does not directly give you this cash, see, in some of the questions you would directly be getting these figures. Directly cash inflows दिया है, तो ये format बनाने की फिर जरूरत नहीं है. Then you don't have to take extra efforts in preparing this format because directly they have given this values only that we need. But sometimes they may give some variables from net profit before tax, or sometimes they may give values from sales, or sometimes they may give value from NPBDT. So for that we need to understand the format. We need to know from which point we need to start. So that's why understanding this income statement or this format is very, very important. Understood? So again, non-cash expenses are to be ignored. This is the first point. Second point, everyone had a question like, sir, how to decide this R? How to decide this R? What is the rate of return? What do you mean by rate of return? So here R, or I would say your discounting rate. R is nothing but the discounting rate, the rate at which you discount the future values. Here R would be ideally, actually, or in practical world, ideally, it is the desired rate of return from the project. Desired rate of return from the project. कंपनी का इच्छा, उस प्रोजेक्ट से कंपनी की इच्छा कितना कमाने की, दैट इज डिजायर्ड रेट ऑफ रिटर्न और एक्सपेक्टेड रेट ऑफ रिटर्न फ्रॉम द प्रोजेक्ट. The wish of the company to earn from that project, the rate that company wishes from inside to earn from that project is desired rate of return, expected rate of return. And this is a very subjective. I would want 15% from the project that I'm investing. In the same project, you may expect 20%, depending on the other factors or depending your company ka situation. So this desired rate of return depends on companies to companies personal wish. Are you getting this? Depends on company to company ka personal situation or factors that revolves around the company. So actually, this is the desired. The R is or the discounting rate is the desired, the wish to earn from that project is the desired rate of return. That is R. But say for example, you don't have any information, and as I said, it is very subjective. It may depend from person to person, from company to company. But as far as examination is concerned, we need to come at a uniform rate. Yes, obviously NPV will affect due to variation because it would depend on R, and R is your desire, your wish to earn from that project. So it would depend from company to company. So that's why some company may start a venture that you may not wish to invest, or that you may not wish to invest, that you may not wish to start. Are you getting this? Because it depends on company's wish, company's expectation from that return. But since, as I said, this is a very subjective, it depends on person to person, it depends on company to company. But from examination point of view, we need to come at a uniform rate. So uniform rate, if the question gives you about the industry rate of return, then you must use that. Industry rate of return. I am starting a new manufacturing business of production of apparels, of kids apparels. So in that industry, what everyone is earning would be my expectation. At least I would want to earn that. So your rate of return in that case would be industry rate of return. Are you getting this? Is everyone following? If desired or expected rate of return is not given, then check for industry rate of return. What is the rate of return that all the other companies in that industry is generating? Check that. But again, this rate of return is not given, then it would be your cost of capital. KO. Are you done with this chapter, cost of capital? Are you done with this chapter? Yes, WSEC, correct. KO. Yes, okay. So ideally, if my desired rate of return is not given or industry rate is not given, so as a layman think, I would at least want to recover my cost from the project. Yes or no? I would at least want to recover my cost of capital, my cost from the project. So that would be your discounting rate. Are you getting this? That would be your discounting rate. The funds that you have raised, you will invest that in project. And the funds that you have raised will bear some cost of capital, will bear some cost, at least recover that from the project so that you are in break even. So that discounting rate, that are, yes, correct. Cost of capital would be discounting rate. But ideally from practical scenario, because I was into financial profile in one of the blue chip companies, and we used to calculate or we used to take the discounting rate based on our wish from that project. This is from practical scenario, but from exam point of view, in 90% of the question, your discounting rate would be KO from examination point of view. KO. Because as a layman think, I would at least want to recover my cost of capital from the project because I have raised capital to invest in the project. I will earn and I will bear the cost. I will pay to the capital providers. At least I would want to earn that. So that's why your discounting rate in that case would be KO. Are you getting this? And how do we calculate KO? How do we calculate KO? It is nothing but weight of debt, cost of debt, plus weight of equity, cost of equity, plus weight of preference, cost of preference, plus weight of reserves and cost of reserves. So all the sources of capital would bear some weight and would have some cost. And that's how you calculate cost of capital, correct? So can I say directly or indirectly, interest expense has been a part of KD? Interest expense KD में आ ही गया होगा. Are you getting this? Are you following? To calculate KD, we would be using interest. Our formula was interest divided by the capital, divided by the debt capital. Interest 1 minus T कर देते. So can I say my discounting rate, the discounting rate that I am using is KO, and in that interest and preference dividend is already included. Interest and preference dividend is already included in this cost of capital. So if we subtract interest over here, that would be double deduction of interest. If we subtract interest somewhere here in this income statement, then there would be double deduction of interest. One, you have already taken it in KO. Then if we subtract here, then there would be double interest expense. So that is incorrect. So that's why we don't take interest here. किसी का क्वेश्चन था सर why interest expense is not a part of income statement? So the reason is interest expense is already considered in KO, in the rate of return, in the discounting rate. So if we take here again, then there would be double interest expense ka deduction, and it would not depict correct result. So that's why we don't subtract interest or any financing cost over here. Not preference dividend, not interest, not equity dividend, nothing. We won't subtract anything because it is already been a part of cost of capital. And cost of capital is what? It is a cost element only, na? That is cost only. So that's why interest and preference dividend does not form part of cash inflows under investment decision. So everyone understood how to calculate cash inflows. Hope everyone understood the discounting rate, the concept of discounting rate that we need to use. Any queries still here, friends? कोई भी doubt? Are you understanding? Are you getting with the flow of this chapter? How silly the doubt may be, you need to ask. You may ask. No one will judge you. Understood? So the discounting rate is done. Cash flows is done. Now there are certain pointers that we need to focus while calculating cash inflows. Certain pointers. Need to be focused on. First is, as I said, non-cash expenses are to be ignored. There are certain pointers of capital budgeting that you need to keep it in your mind. First is all non-cash expenses are to be ignored because we are more concerned with cash inflows rather than profit. Okay? So this is first. Second, see, to start a new venture or to start any new business, one is capital investment that you need and one is working capital that you will need. Working capital is the funds for day-to-day running of your business operations. Correct? So can I say working capital you have to invest at the start of the project? Correct? So can I say working capital you have to invest at the start of the project? Correct? So can I say working capital you have to invest at the start of the project? Correct? So can I say working capital you have to invest at the start of the project? Correct? So can I say working capital you have to invest at the start of the project? So that will be, it will be an outflow. And at year 0, because you need to start a business, so for that you will need working capital today itself. Are you getting this? So working capital, it will be an outflow at year 0, because along with capital investment, you also need to invest in working capital, the funds that you need to run day-to-day business operations. Correct? But once the project is ended, once the project is completed after 10 years, or in our example, after 7 years, this working capital would be released. This working capital would be released, and that would be, it would be an inflow. वो आपको वापस आ जाएगा at the end of the project. It would be an inflow at the end of the term. End of the term of project. Are you getting this? First point was about non-cash expense, that it has to be ignored straight away. But for tax deduction, tax shield purpose, you need to consider. Second, working capital. Working capital is the investment to run day-to-day business. And that investment has to be made at year 0, at the start of the business. But once the project is completed, once the project is done, that working capital means stock में पैसा अटका है, debtors में पैसा अटका है, cash पड़ा है, that would be released back to the company at the end of the term. So that is an inflow. Everyone following? Is expected rate of return also already deductible? Means, I didn't get your question. See, expected rate of return would be your wish, would be your desired rate of return. So obviously it would be greater than KO only, cost of capital only, because you would want something more than your cost of capital. So obviously उसमें भी interest and preference dividend, everything would be included. Are you getting this? Released capital again, okay. See, working capital is the funds that you need for running day-to-day business operations. Working capital, you have separate chapter as well, which we will take in future. But working capital means your amount, your money is blocked in. See, to start a business, now let me explain you with a very basic understanding. Okay. Let me explain you with a very basic understanding. Let's say I want to start a new business. ठीक है, manufacturing a business I want to start. Obviously, to start any business, I would need capital. Yes or no? I would need capital. Now, to start a manufacturing business, let's say I bought a new factory land. I constructed factory building on that factory land. I installed all the machineries that I need for production. I installed all the electrical fittings for continuous electrical movements. This all thing I have done. Okay? So can I say in other terms, I have invested in fixed assets. I have invested in fixed assets. That includes land, factory building, electrical fittings. I have constructed an in-house office in the factory as well. So can I say all the investment in fixed asset is done? All the investment in fixed asset is done. Okay? I am coming to that point, Sanya. But let me explain you the concept of working capital, because many of you has confusion on how release of working capital is an inflow. Now I have invested in fixed asset. ठीक है, यहाँ तक पहुंच गया. But just by investing in this fixed asset, will I be able to start my manufacturing business? मेरा manufacturing start हो जाएगा. Will I be able to produce the shirts that I want in fixed asset? Just by investing in fixed assets, my manufacturing will not start. I would need some raw materials. I would need some inventory. Correct? I would need other expenses like labor, etc. to start or for the smooth functioning of these fixed assets. That amount that you need is working capital. Are you getting this? Fixed assets cannot work on its own. You need additional capital for smooth functioning of fixed assets. मुझे raw material खरीदना पड़ेगा. I need to hire some labor. I need to apportion some overheads, and then my proper manufacturing business will start. Correct? So once my manufacturing business will start, I will sell the goods to debtors. Yes or no? Correct? So once the project is completed, there would be certain amount of debtors. There would be certain amount of stock that would be left over. There would be certain amount of cash bank balance from that project. So can I say at the end of the project, जब life खत्म हो जाएगी project की, debtors would give me its amount. Debtors will pay their dues. Inventory, I would sell it in a scrap or obsolete it, and cash bank balance, I would transfer it into my company's account. So can I say this is nothing but release of working capital? Working capital is what? Investment in current assets, less current liabilities. So at the end of the project, you will release certain amount from debtors. You will sell the inventory that is left over on scrap basis or on obsolete basis. Are you getting this? So at the end of the project, your working capital would be released, because working capital is a temporary capital. Any queries now? In release, the outflow will come as inflow as the return. Working capital, yes. Sanya had a question, sir. Working capital can also be increased in coming years. Yes. So for example, if my requirement of additional working capital, say for example, at the end of year 3, so and so, though, I need to discount that as well. So that would be an outflow at the end of year 3. So let's say I need additional working capital in year 4. So that is an outflow. So I need to discount the outflow of the year 4. So that's correct. So any queries now? In release, the outflow will come as inflow, correct? As the return on investment of short term also include current assets. So it's inflow from this. Yes, correct. Absolutely. Kasak is right. I'm trying to explain that only. So working capital is nothing but current assets less current liabilities. CA is current assets, CL is current liabilities. This is CL, not C. CC nahi hai, CL hai. WC is working capital. You need to get familiar with this short denotions in financial management, because a practical world, when you become a financial manager, they will not write the entire terminology. They will just write short abbreviations like CA. My company CA is so and so, my company CL in so and so. So you need to get familiar with this terminologies. Okay, so my release of working capital will be an inflow. So this was second point. Any queries for working capital now? So in short, to remember, your working capital is an outflow at 0 point, because you will invest that in the working capital, and after the end of the project you will get that funds back to your project or back to your company. So that would be release of working capital, and that's an inflow. Again, third point is about allocated expenses. See, now please pay attention on this point. Allocated expenses is all about common cost. Company में certain costs are common that are allocated to different projects. So let's say currently there is a common cost that is allocated to project A, project B, project C, project D, project E. And let's say the common cost is 1 lakh and it is allocated equally. So let's, for the sake of easy understanding, let's say there are only 4 projects. Okay? For the sake of easy understanding. So can I say all the project would be apportioned 25,000 each? This is a common cost. Are you getting this? Any query still here? Common cost means cost that is attributable to all the projects, because it is, because ये let's say salary to an employee, ये employee ने सब project के लिए काम किया है, so it will be allocated to all the projects. Any query still here? So currently my common cost is 1 lakh and it is attributable to 4 projects equally. So each project ka share is 25,000 each. Correct? Now let's move forward. Now let's assume I'm starting a new project, or I've invested in new project. I've invested in new project, project E. Now ideally, if my common cost remains same, if my common cost remains same, 1 lakh only, I'm not increasing my common cost due to certain tax or due to certain operational saving methods that I have. I am not increasing my common cost. तो कैन आई से अब सबका शेयर 20,000 हो जाएगा. अब सबको अपॉर्शन 20,000 होगा. Yes or no? Yes or no? So now my apportionment would be 20,000. But by taking this project, by taking this new project, is there any increase in common cost? Just apportionment is different. But is there any increase in common cost, or is there any increase in allocated expense from the overall company's perspective? No. So can I say, since ये project के लेने से or by investing in this project, there is no such increase in common cost. So this allocated expense is also to be ignored. This is what investment decision chapter says. This is what capital budgeting says. कि आपका ये cost, it is not due to because of project T. हाँ, if this common cost would have increased due to this investment in new project, then it is to be allocated. Then it is to be taken for calculating net present value. This is what investment decision says. If common cost, if by taking a new project, there is no increase in allocated expense, just apportionment amount is getting changed, then allocated expense is to be ignored, just like non-cash expenses. It is irrelevant for the project. Because ये project नहीं भी होता ना, फिर भी ये 1 lakh ही रहने वाला था. Had this project not been taken, still the common cost would be 1 lakh only. So it is irrelevant for our project. Are you understanding? Are you following? It is irrelevant for our project. But had this common cost increased because of this taking new project, then this allocated expense would have become relevant for our project. Understood, everyone? Any queries here? Yes. Thank you. So had common cost or allocated expense been increased due to taking a new project, then that cost would be relevant. But had the common cost not increased, then it is irrelevant for our project. Because ये project नहीं भी होता, फिर भी my expense would be 1 lakh only. So it is irrelevant. So unless otherwise specified, allocated expenses are to be ignored for deciding whether to invest in project or not. Sir, if this project increased to 1,20,000, then 20,000 will be taken as. Now, if that increase of 20,000 is specifically because of this project, then yes, 20,000 needs to be taken as cash outflow. Then you are correct. Increase in any common cost due to increase of this project or due to investing in this project, then that would be your then that expense would be relevant for project. So you need to just think whether this cost is because of the new project. Yes, then it is relevant for the project. This is how you need to think. Yes, correct, outflow. So you just need to think one thing. Had this cost increased because of taking the new project? Yes, it is increased because of taking the new project. Then it is relevant for the project. Then you need to take it as cash outflow. Understood? So unless otherwise specified, allocated expenses are to be ignored. Unless otherwise specified in the question, allocated expenses are to be ignored. Yeah. If the question specifies that allocated expense due to taking up the project has been increased by 20,000, then that 20,000 is now relevant for our project and we will take it as cash outflow. Okay? But unless otherwise specified, allocated expenses are to be ignored. If cost of new project is increasing, yes. So sometimes it is possible that my initial investment is 12 lakh 50,000, but after a few years I need to invest more. Then that would be a cost, that would be a cash outflow in that particular year, and you need to discount that as well. So let's say 1250 से मैंने business start किया, but after 3 years I need to invest 5 lakhs more in the project. So that 5 lakh would be my cash outflow, but at the end of year 3, तो उसको भी डिस्काउंट करना है. You need to discount that as well. ठीक है. Fourth point. Fourth critical aspect is about sunk cost. Hey, what do you mean by sunk cost? Can anyone tell me what do you mean by sunk cost? डूब गई. Yes, correct. Sunk means डूबना. Sunk means डूबना. Means certain expenses which is irrelevant for the project is to be ignored. That is the meaning of sunk cost. Let me again explain you with the help of example. So to start a new business or to start any venture, practically project report is to be prepared. क्या बनाना होता है? Project report. Project report gives you a broad idea about the feasibility of the project. Yeah, what would be my cash inflows in the future year? What would be my cash outflows for each year? And project report gives you the overall bird's eye view of the project, like how you will go in the project as far as financial perspective is concerned. So generally, ideally, this project report is, yes, cash already incurred in the past. Project report is generally prepared by a professional. So company does not have time to prepare such project report. It wants to focus on its core business. So it will company will hire a professional and will give them a task to prepare a project report. Can I say professional will not do charity? He's there to earn bread and butter. So he will charge some fees. His fees is, let's say, 2,50,000. So he prepared a project report. The fees he charged is 2,50,000. Now, tell me, friends, whether you accept this project or not. Can I say you have to bear these fees? चाहे आप project लो या ना लो, whether you take the project or not, you have to pay his fees. You cannot say, no, I am not taking the project, I will not pay your fees. You cannot say likewise. Yes or no? So, irrespective of irrespective whether you take the project or not, this fees has to be borne. So, this is sunk cost. Whether you take the project or not, this fees, this expense, तो गया आपके जेब से, डूब गए आपके पैसे ये. So sunk cost, again tell me, is it relevant or irrelevant for the project? Obviously irrelevant, because whether you take the, how relevant, whether you take the project or not, ये पैसे आपके गए, it is irrelevant. That professional will not say ना कि अच्छा आपने project नहीं लिया, you have not taken the project, then don't pay my fees. He will not say like this. So this cash or this expense is already been incurred, whether you take the project or not. So it is irrelevant for our calculation. Even if we take the project, we have to pay the fees. Even if we don't take the project, we have to bear this fees. So this cost is already been incurred. डूब गए, expense हो गया, डूब गया पैसा. So sunk cost, again irrelevant for our calculation. Irrelevant, correct. Everyone is correct. Irrelevant. So again, quickly revise about the certain pointers, the crucial aspects of investment decision. First is non-cash expense is to be ignored. Working capital, second is working capital. Working capital will be a cash outflow at year 0, today 0 point, and release of working capital would be an inflow at the end of the term. Third was allocated expense. Allocated expense is all about common cost. Unless otherwise specified, allocated expense are to be ignored. Likewise, sunk cost is also irrelevant, because whether you accept the project or not, that cost has been incurred, that you have borne, that paisa has sunk, डूब गया है. So again, sunk cost is irrelevant. Similarly, there are other two crucial aspects that we need to consider under capital budgeting, but we will see that when we do some practical problems. अभी से समझा दूंगा. If I explain you now, bouncer जाएगा, it will go above your head. So as and when we reach to that level, as and when we reach at that point, we will understand that. ठीक है? But as of now, you need to just keep in mind that capital budgeting or investment decision is all about whether to accept the project or not. And acceptance or project will be depend on comparing the present value of cash inflow with present value of cash outflow. And how to calculate present value? For that, we have concept of time value of money. How to calculate discounting rate? We understood that. How to calculate cash inflows? हमने पूरा income statement देखा. We studied entire income statement starting from sales till cash flows after tax. But there are certain crucial aspects that we need to consider while investment decision. That crucial aspects are about non-cash expense, about working capital, about allocated expense, and about sunk cost. Any queries still here? Students, any confusion, any clarity that you need till this point in time? Sure. Can we move ahead? Okay. So as I said, net present value technique is one of the technique to make decision or to decide whether to invest in the project or not. Likewise, there are other 6 techniques that we need to study in this chapter as well. So let's study each of these technique one by one. Okay? And again, we will understand this net present. What about opportunity cost? Okay, opportunity cost. Again, as I said, there are certain pointers that I will explain you as and when it comes in the question. So one was that opportunity cost. So we will learn that when we understand or when we see the practical problems and when it actually comes. ठीक है? क्योंकि अभी सबको नहीं समझेगा. Again, I am repeating, one technique is one of the technique of capital budgeting is net present value. We will learn NPV technique again more in detail when we solve practical problems. But as of now, let's just broadly categorize the different capital budgeting techniques that we need to learn in this chapter. लेट्स ब्रॉडली कैटेगराइज. एटलीस्ट हम नाम तो याद रखे. लेट्स गेट फैमिलियर विद द टर्म्स. Let's get familiar with the names. First is payback period. The name of the technique is payback period. This technique has certain limitations which is overcome by another technique called discounted payback period. Payback period. This time I will write the entire term, but after that I will just write in short terminology. So payback period is denoted by PBP. Since it is first time, I am writing the entire terminology, entire term, but after that I will just write it as PBP. So you need to understand what is meant by PBP. Discounted payback period is DPBP or DISC PBP. Third, we will understand the accounting rate of return. Accounting rate of return, and it is denoted by ARR, accounting rate of return. Fourth technique, broad insight that we already studied is net present value technique. And it is, tell me, bolo, isko, how to denote this term? What should be the short term of this? Yes, NPV, correct. Net present value. Fifth is profitability index, or another name is desirability factor. Sometimes question says calculate desirability factor. Sometimes question would say calculate profitability index. It is one and the same. PI, profitability index. 1, 2, 3, 4, 5. Sixth technique is IRR. Sorry, पहले full form लिख देता हूँ. Internal rate of return. Internal rate of return, and it is denoted by IRR. And last but not the least is modified internal rate of return. It is advanced version of internal rate of return, because there are some deficiencies in IRR method which is being solved by modified internal rate of return. And it is denoted by MIRR. Okay, so just we saw about NPV technique that helps us in deciding whether to accept the project or not. Likewise, there are other 6 techniques apart from NPV that gives us, or that will help us in deciding whether to accept the project or not. Learn the limitations of this technique. As far as the point of view, they won't ask any question on, like, for practical problems, nothing on limitations. It can come on theory part or maybe MCQ part. So for that, you need to read the theory part as well. PBP also. अरे यहाँ पे मैंने मिस्टेक कर दी. ठीक है. So just if you want to capture the snapshot of this page, you can capture it. These all are the techniques that we need to learn. Practical problems are likely from this all techniques. So as far as practical problems are concerned, they ask problems from these techniques. आगे बढ़े लाइफ में, can we move forward in our lives? In that query sheet you have asked, in that query portal you have asked, let me check that. Yes, what was your question? I cannot see your question. I cannot see your message. Sitkala. Can you type it here? I cannot see your question. I cannot see your message. Sitkala. I don't know how to pronounce, but Sitkala. Is it Sitkala, right? Sitkala or Sitkala? Traveling cost is a sunk cost. It depends. You cannot just directly say that it is a sunk cost. Let's say I am traveling specifically for the project purpose. Specifically. So had the project not been taken, I would not travel. So that is not a sunk cost in that case. Specifically to review the site or to visit the site or to visit the project site, I am traveling. So in that case, it is specifically for that project. So that is relevant. So you need to ask question to yourself. Had the project not been taken, would this cost be incur or not? अगर project नहीं लेते, if the project is not taken or if the project is taken or not taken, and you are anyways incurring the expense, then that is a sunk cost. So you need to ask the question to yourself. Hey, what break in 2.5 hours? So traveling cost, if it is specifically for the project purpose and it is relevant to your project, had the project not been taken, then you would not have traveled. So in that case, it is relevant cost. Hey, you are a CA student. What break in 2.5 hours? Generally, yes. All the testing and expenses would be generally, yeah. You cannot just make a thumb rule out of it. As I said, you need to ask a question. Is this relevant for my project or not? That question you need to ask. Had the project not been taken, would this testing expense incurred? If yes, yes, no break, correct. So to decide whether it is a sunk cost or not, you need to ask question to yourself about its relevance. Okay? Now let's start with our first technique, which is payback period. And it is denoted by PBP. Payback period means the time, the period within which my original investment is getting covered up. Again, payback period is the number of years taken to recover my original, to recover my initial investment. That is payback period. Are you getting this? Let's say my initial investment, let's understand. Let's say my initial investment for the project is 6 lakh. Let's say it is okay, 6 lakh. And my annual cash inflows is 2 lakhs per annum. My term of the project is 5 years. Okay? So my initial investment in the project is 6 lakh. My annual cash inflows from the project is 2 lakh per annum. My term of the project is 5 years. Payback period is the number of years it takes to recover my original or initial investment. Means within how many years or within how much period I'm able to recover my 6 lakh of investment. Tell me, what would be my payback period here? 3 years. Perfect. Perfect, everyone. That's 3. Correct. That is the meaning of payback period. The time taken to recover my original investment, to recover my initial investment. Correct? So payback period की definition is time taken to recover my original investment or initial investment. And how did you get this 3? So when I say what you did is nothing but your brain used one formula. Oh shit. I think the earlier parts has not been recovered and it got somehow deleted. But you have taken the snapshot of the different techniques, right? Anyways, this was our first technique, which is payback period. Is denoted by PBP and it means time taken to recover original investment amount or initial investment amount. And we understood it with the help of one example, which is cash outflow of 6 lakhs, cash inflow of 2 lakhs per annum, life of the project or term of the project is 5 years. And you all said that, sir, the payback period, my original investment, my initial investment of 6 lakh will get recovered after 3 years. So when I say what you did, it is nothing but your brain calculated or used one formula, which was 6 lakh divided by 2 lakh. So in other words, can I say the formula is cash outflow or initial investment? The formula is initial investment divided by annual cash inflows per annum. Yes or no? This is the formula that your brain used to calculate to get the answer of 3. Okay, let me try that. Second file is not being able to. Okay, so this is the formula to calculate payback period. But this formula, friends, students, please keep in mind, when cash inflow is constant per annum, the BA formula we can use. When cash inflows per annum are constant from the project, only then we can use this formula. Initial investment upon annual cash inflows per annum. इट इज पॉसिबल ना कि कैश इनफ्लोस पर एनम मे बी अनइवन. जैसे वी टूक इन आवर एग्जांपल लाइक इन ईयर 1 it was 1 lakh, then it increased to 350, then it increased to 4 lakh. So this formula is to be used only when the cash inflows per annum are constant. ठीक है? When cash inflows per annum are constant, only then we can use this formula. So how to calculate payback period when cash inflows are uneven? When cash inflows per annum are uneven. In that case, how to calculate payback period? Let's learn that. Again, my cash outflow or initial investment. Yeah, correct. Yeah, आपने पढ़ आप you all have studied this or not already? Have you studied? Are you done with this chapter? कुछ लोग पढ़ के आए ऐसा लग रहा है. My initial investment is, let's say, 750, and my cash inflows, the stream of my cash inflows per annum are as follows. Year 1, 150. Year 2, 2 lakh. Year 3, 375. Year 4, year 4, year 4, let's take 225. Year 5, this was a booming year for my project, so in year 5 I want 850, and again year 6, it was a booming last year of my project, 950. So here, tell me, can I use the above formula, initial investment upon annual cash flows? Tell me, can I use that formula? No, I cannot use, because the cash inflows here are uneven. So in that case, we need to use, or we need to calculate cumulative cash flows. See how we calculate that. First column would be year, second column would be cash inflows, third column cumulative cash inflows. So year 1, 2, 3, 4, 5. My life of the project is 6 years. Cash inflows per annum, I will just copy it from my illustration. $25, $950, $850, and $950. Correct? So in year 1, cumulative cash inflows $150. Acha, cumulative cash inflows till year 2, it will be $350. Yes or no? We just keep on adding the cash inflows. Means ki year 2 tak my company has generated 3,50,000 of cash inflows. Till the end of year 2, my company has generated 3,50,000 of cash inflows. Till the end of year 3, my company has generated 7,25,000 of cash inflows. Till the end of year 4, my company has generated 9,50,000 of cash inflows. Till the end of year 5, my company has generated 18 lakh of cash inflows. And till the end of year 6, my company has generated 27,50,000 of cash inflows. ठीक है? Can I say payback period is nothing but the time taken to recover original investment? How much was my original investment? How much is my initial investment? It is 7,50,000. Means can I say 7,50,000? It would be recovered somewhere here, somewhere between year 3 and 4. It falls somewhere here. Yes or no? What is happening here? Yes, correct. So my 7 lakh. Word mein I cannot use this pen. I have tried that as well. I am not able to use the pen in Word. It has certain restrictions. So my 7 lakh. This is now sure. 7 lakh is getting recovered between year 3 and 4. Means my payback period is 3 plus something. 3 years to hai for sure. 3 years, minimum 3 years to hai, because till the end of year 3 I have just recovered 725, but I have not recovered 750. So my payback period is 3 plus something. That is for sure. Itna to decide till your decision is done, like it is 3 plus above. Now can someone help me in calculating what is this something? What would be that something? 3 plus how much period? Can anyone help? Can anyone try to solve? It is 3 plus something. That is fixed. वो पक्का हो गया. Because till 7, till the year 3, it is 725. But in year 4, it is 950. So it is somewhere between 3 and 4. So 3 plus something is for sure. But how much is that something? Can anyone help? 25,000 divided by. Yes, correct. Unrecover amount of initial. That is 25,000. That is unrecover. Sagar, that is. But how to calculate that? See, let's understand with certain logic. With some logics. Okay? So this is year 3 and this is year 4. Till year 3, I recovered 7,25,000. And till year 4, I recovered 9,50,000. Okay? Are you getting this? Acha. So in the entire period of year 1, in the entire period of this year 3 to 4, means in the entire 1 year period, how much I recovered? Can I say 2,25,000? In the entire period between year 3 to year 4, in the entire that period of 1 year, I have recovered 2,25,000. Yes or no? Yes or no? Yes, that's correct. But I just have to recover 25,000, not 2,25,000. I just have to recover how much? To recover my initial investment, I just have to cover 25,000 and not 225. So that's correct, 25. So you can use the method of interpolation, that 25,000 upon 125 that you did now, that is correct. But that is coming from the concept of interpolation. पूरे एक साल में I am able to recover entire 1 year period. In the entire interpolation means cross multiplication. School में करते थे ना? We used to do it in our school life. Entire 1 year period, I am able to recover 2,25,000. But I just want to recover 25,000. So how much period? Just cross multiply. That is nothing but 25,000 into 1 divided by 2,25,000. ठीक है? So it is nothing but 25,000 into 1 divided by 225, which comes to 1.11 year. No, sorry, 0.11. So 3 plus 0.11 year. So my payback period comes to 3.11 years. Are you getting this? So this method is called interpolation, huh? Cross multiplication. The cross multiplication that we used to do in our school lives. That is called interpolation. And I hope everyone understood the logic to calculate payback period when cash inflows are uneven. When cash inflows per annum are not constant, it is uneven. So in the entire 1 year period, my company recovered 225, but I just want additional 25 to get recovered, not 225. Clear? One is this 1 year period, one for 1 year period. And if you don't write, then it is also fine. नहीं लिखना हो तो भी चलेगा. 2 minutes break. Okay, फटाफट ले लो. You don't need to convert it into days, into month or days. You can write it this way also. 3.11 years. You can write it in years as well. फटाफट take 2 minutes break. जिसको चाहिए उसको. I will continue. Sir, the project booming period is also estimated. See, I am not giving break. If you want, you can take it from your side. I am continuing with the session. ठीक है? The project booming period is also estimated. अभी मैं उस पे आ रहा हूँ. But as of now, did you understand how to calculate payback period? पहले let's understand that. पहले let me know whether there is any confusion or clarity that you need in payback period. There are certain advantages and disadvantages of this payback period. I am coming to that. That is the next topic. But as of now, clear? Okay. So payback period is clear. Payback period is the time taken to recover my original investment. And if the cash flows per annum stream is constant, then simply apply the formula. If cash inflows per annum are uneven, then use interpolation. Okay? This is how we calculate payback period. And payback period. Now, let's understand how payback period helps us in decision making. Let's say after calculating payback period of a project, I found that it is taking 7 years to recover my initial investment. So can I say this will help me in deciding whether to accept the project or not? I will then compare it with my actual, let's say I want to recover my initial investment within 3 years. So can I say I will reject this project because it is taking 7 years? So it depends on company to company, like within how much years they want to recover it, their initial investment. So this is how payback period helps in decision making. Understood, everyone? Let's say after calculating the payback period, it comes to 10 years. But here I am like, I want my initial investment to be recovered very swiftly. Within 5 years, hona chahiye. Then I will not take that project because it is taking 10 years of time. Yes. So this is how you use payback period. Now, the advantage of this payback period is like it is very, 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 very simple to calculate. Advantage is very simple to calculate. Second, it will give you a very quick insights. Very quick insights about the project. Like it will help in taking very quick decision. Let's say my standard requirement is 3 years and the project that I'm calculating gives the answer of payback period to 7 years. So very quickly I can decide that I cannot invest in this project because it is not fulfilling my requirement of 3 years का payback period. So it helps in very quick decision making. ठीक है? Disadvantage of this project is, can anyone tell me what is the disadvantage of this project? Can anyone try what is the disadvantage of this project? Ah, perfect. ये book खुला रखा है. Have you opened the book? I think you have opened the book. Time value, yes. Payback period, see. All the absolute numbers are considered in payback period. It ignored the time value of money. Means as per payback period, worth of 9,50,000 at the end of year 6 is worth of 9,50,000 today also. So it is illogical. So it ignores time value of money. Ignores time value of money. Oh, अरे यार. Disadvantage number 1. Ignores time value of money. So according to payback period, worth of 9 lakh at the end of year 6 is worth of 9 lakh today also, which is not correct. It is ignoring. Can anyone tell me what is the other disadvantage of payback period? Can anyone try what is the another disadvantage of this payback period? See, if you observe it very carefully now, our calculation of payback period was completed over here. We ignored this cash inflows. See, our calculation was completed over here itself. 950 tak. After that, after the payback period, the cash inflows are ignored. Even though the cash inflows may be very high, even though the cash inflows are very high compared to the earlier years के cash inflows, it ignores that. Okay? So it gives no importance to the cash inflows that are generated after payback period. Payback period says my initial investment is recovered now. So whatever could be your cash inflow after my payback period, I'm least concerned with that. This is what payback period says. Yes, long-term period. Yes, it ignores the long-term period. Correct. Cash flows generated after payback period are ignored. Are ignored, or which means it holds no relevance, or it holds no relevance. So there may be many projects which could generate cash inflows at a later stage of the project and not in the initial years. So in that case, your payback period would be high because cash inflows are generated more after at the later stage and not at the earlier years. Okay, so it ignores that. Correct. Long-term projects. Yes, correct. Smart, huh? Everyone is smart. I think after you become a CA, you should become FMK professors. You all are welcome to contribute to ICAI. Understood? Payback period. The next technique is discounted payback period. Tell me, उसमें क्या होगा? What would be the difference between payback and discounted payback period? You only yourself will answer that. Discount factor. Perfect. Correct. 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 The disadvantage of the payback period is being solved by discounted payback period. We need to consider the present value of cumulative cash flows. Yes, correct. We need to calculate, we need to consider the present value of the cash inflows and then calculate cumulative cash inflows. Time value of money. Perfect. Smart. So next technique is discounted payback period. The next technique is discounted payback period. It solves the disadvantage of normal payback period. That is, in other words, it considers time value of money. It considers time value of money. Okay? So the difference between payback period and discounted payback period is only that under discounted payback period, you need to calculate the present value of cash inflows and then calculate cumulative cash inflows. Okay? So let's take the above example only. My year was 1, 2, 3, 4, 5, 6. And let's say my discounting rate, and we know discounting rate would be the cost of capital. My discounting rate is 12%. KO is 12% or discounting rate is 12%. Cash inflows. In year 1 it is 150. In year 2 it was 2 lakh, 375, 225, 2 lakh, 375, 225, 850 and 950. But now, before calculating cumulative cash inflows, we need to find present value of this cash inflows. Present value of cash inflow. Cash inflow is denoted by CI. So in future sessions, I will just write it as PVCI. PVCI is nothing but present value of cash inflows. PVCO is nothing but present value of cash inflows. So just get familiar with these short abbreviations. Okay? So my rate is 12%. My cash inflow for year 1 is 150. So when I say present value of year 1 cash inflow would be 133,928.57. 133,928.57. Present value. How to calculate present value? Discount the future values. 150 divided by 1.12 equal to 1 time. Okay, for year 2, 2 lakh divided by 1.12, press equal to 2 times. 159, 438.78. 375 divided by 1.12 equal to 3 times. कितना for year 3? 159. Yes, correct. For year 3, For year 4, it is 142,991.56. What is for year 3? Can you calculate? 266,917.59. 266,917.59. For year 5, it is 850 divided by 1.12, 2, 3, 4, 5. 782. Correct. This is 850 divided by 1.12, press equal to 5 times. 1, 2, 3, 4, 5. 482. 482, 312.82. And for year 6, it is how much? 950 divided by 1.12, 2, 3, 4, 5, 6. For year 6, it is how much? 481, 299.56. 481, 299.56. So now, instead of taking cumulative of absolute numbers, you have to take cumulative of relative numbers. So when I say cumulative of year 1 would be the amount of year 1 itself. Cumulative of year 1 and year 2, बोलो कितना हो रहा है? Correct, 481. I am not able to use my calculator because of some deficiency. 133. अब बोलते जाओ चलो. Year 2 293 367.35. 293 367.35. For year 3, please tell me year wise. Year 2 का कितना है? 133,928.57 plus 159,438.78. 293,367 plus 266,917.59. 562,84.91. 562,84.91. Yes, for year 4 plus 142,991.56. 703,276.5 plus 482,312.82. 704 कैसे? 142,991, 703,276 है. 703 है. Plus 482,312.82. 1185, 589.32 plus 481, 299.56. 1666, 888. Year 2 का how? 288 point कैसे? 133 928.57 plus 159,438.78. It is 293,367 only. This is 159 and not 154. Correct? So let's now calculate discounted payback period. Yeah, okay. So this is correct. Let's calculate discounted payback period. Again, payback period is the time taken to recover initial investment, but here we will take cash inflows in relative terms. So when I say my 7 lakh 50 would get recovered somewhere between 4 and 5, 4 and 5th year, somewhere between here. Yes or no? यहाँ पे रिकवर होगा my 750. Is everyone following? In normal payback period, it was getting recovered between year 3 and 4, but here it is getting recovered between year 4 and 5. So again, by interpolation, we will calculate. By interpolation technique, in the entire 1 year period, I am able to recover how much? 482, 312. See how much I am able to recover. 703 था and it became 1185. So I'm able to recover 482, 312.82. 482, 312.82. Yes or no? In the entire period of 1 year, 1185, 589.32. 11 ये कैसे आया? तो 1185, 589.32 minus 703, 276.5. 703, 276.5. So in the entire period of 1 year, I am able to recover 482, 312. But I just want to recover 750 minus 703, 276.5. I don't want to recover 482 entirely. I just want to recover 750 minus 703, 276.5. 46, 723.5. 46, 723.5. So how much period it will take? So use cross multiplication method. 46, 723.5 multiply by 1 divided by 482.82. My answer is 4 plus 482, 312.82. Comes to divide by 482, 312.82. 0.09. 0.097. So my discounted payback period comes to 4.097 years. Okay? So understood the difference between payback period and discounted payback period? 4.096 करेक्ट. अच्छा, किसी का क्या डाउट था? Please explain. Didn't get what? Didn't get the calculation. Okay, I just used the interpolation that I did over here. Let me explain you once again. It is for sure that my 7,50,000 is getting recovered between year 4 and year 5. This is the done. This is the for sure stamp lag gaya hai. In year 4, my cumulative discounted cash inflows. My cumulative discounted cash inflows was 703, 276.5. 703, 276.5. And my cumulative cash inflows till the end of year 5 was 1185, 589. 1185, 589. Okay. So in this entire period, that is between year 4 and 5. So in this entire 1 year period, can I say I'm able to recover how much? Difference nikalo. It is nothing but 482, 312.82. Yes or no? I'm able to recover 482, 312.82. Correct? I'm able to recover 482, but I just want to reach till 750 because my initial investment amount is 750. So I just have to recover 46,723.5. Now you understood how that amount came here in this slide. 3.11, not 0.11. 3 years तक तो सिर्फ 725, only 7,25,000 was getting recovered in payback, in normal payback period. Till the end of 3 years, I am just able to recover 725. So when I say it would be more than 3 years, it would be 3 plus something. It was not just 0.11. That is 3 plus something. 0.11 is that plus something wala figure. Apurva, did you get this? Payback period and discounted payback period. Oh, I just explained you the entire Ramayana. Payback period ignores the time value of money. See, यहाँ पे देखो, we used the absolute figures of cash inflows. See, cumulative cash inflows में देखो, we just used this absolute figures. And see discounted payback period. For calculating cumulative cash inflows, we use this present value figure. हमने इसका we did cumulative of this present value of cash inflows. This is the difference between payback period and discounted payback period. The payback period ignores time value. It does not calculate present value. Directly cash flows say cumulative cash inflows. But here, under discounted payback period, it considers the present value and then it calculates cumulative cash inflows. This is the difference. Vinuta, did you get this now? I hope that is clear. Okay. So now my question to you, just think a little bit and tell me. My payback period will be greater than discounted payback period or discounted payback period will be greater than payback period? Tell me. Think logically and tell me. Which would be more? Which would be higher? Discounted payback period would be higher or normal payback period would be higher? Obviously, discounted payback period will be higher because it considers the present value. It calculates, it brings all the calculation to present value term. Means future value would be worth less today. So always discounted payback period would be higher. Okay? So discounted payback period, it is always higher than payback period. And under discounted payback period, we cannot use any formula. Say under payback period, when the cash inflows per annum were constant, we can directly use the formula and calculate payback period. But under discounted payback period, we can never use that formula because this present value will always be different for different years. This present value figures, this present value of cash inflows will always be different for different years. So you can never use that formula. So to calculate discounted payback period, you need to prepare this table and do interpolation. Is समझ रहा है? Are you getting this? Because here the stream of cash inflows would never be constant. It would always be different for each of the years. It would always be uneven. So you need to prepare this cumulative cash inflow table. I would say not cumulative cash flow, rather cumulative of present value of cash inflows. And then use interpolation. Yes, it also has the same advantage. The advantages are same. Again, discounted payback period will ignore all the cash inflows that are being incurred or that are being earned by the company after the discounted payback period. So it just solves the disadvantage of time value of money. Baki, everything is same as payback period. It just overcomes one of the disadvantage of payback period, which was time value of money. Baki everything is same, just like payback period. But this is, I would say, if you want to calculate payback period, rather than calculate discounted payback period, because it will give more accurate result. Any questions with these two techniques? Any questions? Any queries? Today's session is through to all. Akka clear to all? Please don't hesitate in asking questions. Huh? How silly it may be, how silly it may look, don't hesitate. Your concept should be clear. ठीक है? So two techniques. बातों बातों में हमारी दो टेक्निक हो गई, पेबैक पीरियड एंड डिस्काउंटेड पेबैक पीरियड. ऐसे ही बातों बातों में वी विल कंप्लीट ऑल द टेक्निक्स. ऐसे ही बातों बातों में वी विल कंप्लीट एंटायर एफएम एंड वी विल कंप्लीट आवर सिलेबस and you will be a chartered. Now under payback period there is some concept called payback reciprocal. क्या नाम है उसका? The name of the concept is payback reciprocal. It is just for payback period का reciprocal. Reciprocal. Reciprocal means, can I say reverse? Reverse of payback. But to calculate payback reciprocal, there is one condition. You can only calculate reciprocal, payback reciprocal for that project which generates constant cash flows per annum. Which generates can be calculated only when stream of cash inflows per annum are constant. ठीक है? Payback reciprocal or payback period reciprocal can be calculated only when the cash inflows from the project are constant. So this is one of the condition to calculate payback reciprocal. And by the term reciprocal, we know that it is reverse of payback period. So what was the formula of payback period when the cash inflows per annum were constant? And I said this was the formula. Initial investment divided by annual cash inflows. So what would be the formula of payback period reciprocal or payback reciprocal? उल्टा हो जाएगा. Annual cash inflows per annum divided by initial investment. Formula would be ulta of payback period. Annual cash inflows per annum this is irritating here. Annual cash inflows per annum divided by initial investment. And this is calculated in percentage. See, my investment is of rupees, let's say 2 lakh in the project, and my annual cash flows from the project is 50,000 per annum. Can I say this gives me a quick insight about the return that project would be generating for me? 2 lakh invest किया, 50,000 कमाया. So can I say roughly it helps me in calculating the rate of return? It helps me in calculating the internal rate of return? Yes or no? Roughly it comes to 25%. So quick insight on my internal rate of return from the project. Quick insight on the earning capacity from the project. Are you understanding this? Payback reciprocal gives you a very quick insight, a broad insight about the earning capacity or about the rate of return, internal rate of return from the project. IRR, we are any which ways going to discuss in very much detail in our next sessions, in our future sessions. But payback reciprocal, as of now, you need to understand that it gives a very quick insight about the return that the project is generating, the earning capacity that the project is generating. ठीक है? Yes, correct. Not till maturity, because YTM, under that we take present value of all the cash flows, of all the future cash flows. But here under payback reciprocals, we are not discounting any cash flows. We are not discounting under payback period. वही तो उसका disadvantage है. The disadvantage of payback period is that only ना, it ignores time value of money. So technically it is not yield to maturity, but approx yearly return that project can earn. The capacity of the project to earn yearly return. Okay, no worries. Follow. Any queries? Any doubts for today's session? I think before starting a new technique, I think it would not get complete today. So let's start another or next technique tomorrow itself. But since we have 5 minutes, we can just quickly revise today's session. Very quick revision. Investment decision. Investment decision का एक ही objective, the ultimate objective of investment decision, whether to accept the project or not. This decision you have to make, whether to accept the project or not. Now, to decide whether to accept the project or not, you have to compare cash inflows with cash outflows, but in relative terms and not in absolute numbers, not in absolute terms. And what do you mean by relative terms? It is nothing but comparing present value of cash inflows with present value of cash outflows and then deciding. Okay? Are you getting this? After that, what did we learn? After that, we learned how to calculate cash inflows when it is not given in the question. How to calculate cash inflows. For that, we saw the entire format of income statement starting from sales. So now question may give you from any variable. They may give from contribution. They may give from earnings before tax. We are able to solve now because we know the entire format. After that, we saw what is the discounting rate, because here we need to discount the future values and bring it to present value. So we need one rate. That discounting rate is actually, in practical world, it is the wish of the company, the expectation of the company from that project. If that cannot be determined, then they would expect minimum the industry rate, what others are earning in the industry. If that is also not provided, then at least they would want to recover their cost of capital, because capital they would have raised and they would have invested somewhere in the project. So that capital would bear a cost, interest cost, preference dividend, equity dividend, anything. So that at least they would recover that. So we learned about KO. Net fund flow. Net fund flow is the funds, the cash that is remained that is generated in the company after paying all the preference dividend, after paying all the equity dividend. So from the project you will earn something, right? From the project you will earn something. Then from that earnings you will pay it to preference shareholders their preference dividend. You will pay it to equity shareholders their equity dividend, and the net fund that is left is called net fund flow. Okay. So we understood the discounting rate. After that, as I said, I gave you the broad category of different techniques under capital budgeting. There are in total 7 techniques. We started with payback period. Payback period is the time taken to recover original investment. Time taken to recover original investment. If the cash inflows per annum are constant, use the formula. If the cash inflows per annum are not constant but are uneven, then prepare a column for cumulative cash inflows and then solve it by interpolation. But payback period has its own limitations, like it ignores the time value of money, and the cash inflows that are generated after payback period are also ignored. So to overcome the limitation number 1 of time value, we have another technique called discounted payback period. Under discounted payback period, we saw that cumulation of not the absolute cash inflows is to be done, but cumulation of present value of cash inflows is to be done, and then by applying the interpolation technique, we need to find discounted payback period. And discounted payback period would always be higher than payback period, because it considers time value of money, it calculates present value. Okay. Apart from that, we also saw certain crucial factors, crucial pointers that we need to keep in mind in capital budgeting. What was that? First was about non-cash expense. Non-cash expense needs to be ignored. Second was about working capital. Working capital at the start is an investment, so it would be cash outflow. But after the end of the project, it will get released. So working capital would be inflow at the end of the term of the project. Third was allocation, common cost. If unless otherwise specified, allocation expense are to be ignored. Sunk cost means cost जो डूब गया है, जो खर्चा हमने बेयर कर लिया, जो डूब गया, हमें वापस नहीं मिलने वाला है. So sunk cost is also to be ignored. ठीक है? Any doubts in today's session? Everyone clear with the concept of investment decision and two techniques? Can we end the session now? Thank you for all your support. PAT minus PD minus equity dividend also, because equity dividend actually it is not compulsory to pay, but if the board decides and shareholders agree, then equity dividend would also be paid, right? So the funds would also be reduced because of such payment. Thank you everyone. So it is nothing but PAT minus PD minus equity dividend. That is net fund flow. Okay, please revise these two techniques. You can study the module. You need to study the theory aspects as well from the module. Please revise these two techniques. We will solve practical problem on these two techniques tomorrow, and we will start with new technique with other capital budgeting technique. Okay? It was a great session. Okay, thank you. Thank you to hear that, Satakshi. Thank you everyone. Have a nice day. Have a nice Friday evening. Yeah, live lectures are always exciting. Yes. And you will enjoy it more and more as and when live sessions are through with other topics. Thank you.